Hey, afternoon, morning, wherever you are, and welcome back to another live stream with the Mohawk Forex scalping team. And after a successful day yesterday, scalping the opens and the news events, we're back today with more. And today, as you can see on the chart, we're on the US-30 on our 5-minute chart, and we're going to be tackling the goods trade balance news, which is coming up in about 10 minutes time. Balance of trade, here we go. Look, exports and imports and the balance of trade news, high impact, the only high impact news today outside of the macro environment that's going on, as we've been hearing about on Bloomberg and everything. So this could be a nice one to get in pre-market. As it's pre-open, obviously we expect US-30 to go the reverse off the news. Gold, if you trade gold, usually goes with it, but that, again, it's not guaranteed. It's just the patterns that usually form. So we will wait for this news event to come out, and then we'll see which way it's going to go, and then get in there, get some pips. At the moment, we're kind of in a golden zone on the fib. We're in a demand zone here, as you can see, all green. So people are waiting to take buys to push the 30 back up. But obviously, if the news is, I think we're better than expected, we could see a drop down to 786. RSI is 34 at the moment, kind of in the dead man zone. We really want to be in that neutral zone, and our trend bar is still bearish, like everything it pretty much is. Any kind of buyers are a pullback at the moment. And we've been hearing today that on a cable, we had a successful trade on a sell earlier on down to our Asian line, and we've set our New York line. And so we're looking to take buys later on, back to 140. I don't think it's going to go above 115. If it does, very temporarily. We've been listening to people, and people predicting that they're expecting 110 on the pound dollar is where it could end up, which is about 400 pips away at the moment. Again, it's not financial advice. I'm not telling people to enter a short now, but it's just worth keeping an eye on. The overall trend is obviously down, strong dollar, weak pound, unless the new Prime Minister comes up with something that's going to radically shake things up, or the Ukraine-Russia war ended, then we're on a slippery slope with the pound dollar. Like I say, I think, yeah, 110 is probably doable, but it still means we can catch these 10-20 pip pulls backs. It's a very small move in a big downtrend, but you've always got to remember that if you're ever going to be caught in a trade at the moment, you want to be caught in a short, not in a long, because that's got more chance of coming off in your favor. As you can see here at the moment, if this was our setup, we'd be looking to take a long on this up to our New York line, but at the moment we've still got a couple of hours away before we enter the trade, so we'll just let price do its thing and chill out at the bottom of the Fibonacci. We're not taking any trades on cable. So we've had a couple of successful sales this morning on the Asian setup, and we'll go again on the NY. But the first things first, and we're going to be focusing on this news event before the open, and we've got some Fed speeches in a bit as well, 3 in a row. And then tonight we've got one of our favorite trades on oil, which we've been looking at oil. There's some good signals on oil. We're at $86 at the moment, so oil is definitely one to watch out for. Like I say, we will trade this the news event later on tonight. NAS is pretty much in the same kind of setup, in a range at the moment, again on the 618 on the fib, so pretty much tied together with the US-30. As you can see, the patterns are the same. So, but we're going to go in on this. We'll see if this is a breaker structure and that the demand zone doesn't apply, and we're coming down to 786 and the bottom of our fib again, as we were earlier on today. In the Asian session, we bottomed out at that 30960 level. And the way the news is shaping up at the moment, you know, again, it's just a little pullback. This was a nice double bottom, as you can see. Look, nice W pattern before pushing on up. There was a little M pattern there, look, almost a double top. There was your pullback, and now off it goes again. So we will see. Like I say, as usual, go to the website www.mohawkforex.com for information on how to join our team, get access to this system, indicators, and to the mentorship as well that we do. It's all on the website. So let's have a quick listen to Bloomberg. We're plumbed into as well, so we'll keep an eye on the bigger news.
Products that are made in countries that, you know, if the country is for whatever reason can't ship that stuff out, it impacts us globally. So I think it's, again, this is Tim Cook's specialty on the supply chain side, but it's still just not easy to just snap your fingers and switch supply.
We'll see if they do a printout on this news as well. So balance of trade.
Being above Liverpool in the league, and yet they sacked their manager and you've still got yours. Or we can talk about iPhones magically slowing down when new ones come out.
I think it was that handshake with Conte that was the final straw. That was the loss yesterday may have had an impact. Hopefully Liverpool can do better.
I've been dying to discuss that all morning. It's just Bramo hates football. So
I don't hate football. I'm just into rounders.
Rounders. I don't think Walter knows what rounders is.
I didn't either until you explained it to me this morning.
It's
basically
a short bat instead of like a long bat.
It's basically.
I think it's what baseball was based on.
Stop.
Started as rounders.
You're so mean.
What if I said thank you? Of like
You let him get out of it.
I gave him a choice. I don't want people at Apple thinking this is an agenda I've got. I'm just asking questions this morning about phones magically slowing down when new phones come out.
Magically.
It might be magically. It might just be coincidental. It might be my experience. So someone pointed out that when you get used to something much, much quicker, it starts to feel like the old one was much slower.
Okay, but do you actually borrow your friends' phones to see how fast they are?
No, I just noticed the thing really slows down.
It seems old and fragile.
About the updates to iOS, you do it, and then all of a sudden it just feels like, you know, sluggish?
Well, all the updates are frustrating, right? That is a difficulty. The charging is also an issue. I mean, that was something Walter was having issues with, I know, and I also.
What are you upset with about the charging?
That after a while, it's hard to charge the phone. That some chargers don't work, and it becomes really challenging just to get it to
Just out
connect.
of interest, does that usually happen when a new one comes out?
It usually happens when I'm
when
not
a new one comes out.
fully slept in and haven't had vacation in a while. No, I mean
Not like around September time.
September time, right, when they have
Every
a new
year.
edition.
Just an example.
Something like that.
All right, Kelly Lyons, Lisa Brownson, and Jonathan
Okay,
Ferro.
let's move on.
We've got a poll out there, so go on to Kelly Lyons' Twitter and join in if you wish. Futures down 1/3 of 1% on the S&P. On the NASDAQ, we're down about 1/4 of 1%. What a great time to have this conversation. George Saravelos, the global head of FX research at Deutsche Bank, with the euro breaking down to about 98.90.
Well, we'll take this off the line off, and we're 1 minute 30 seconds away from the news. As you can see, US-30 is dropping, but I say we're not taking any trades yet. We're going to wait. And in fact, let's just make sure we're keyed into our broker. IC markets.
This is Bloomberg.
We're on US-30. We're just doing the smallest lot size as normal. Try and do multiple positions, see how many get filled by the broker. Of course, if we get the move. I mean, if there's no move and it's a non-event, we don't trade it, of course. We only trade if this is a better or worse than expected figure. We've got imports, exports as well, so this is the balance basically between those two. So let's see. This is the figure. 30 seconds, good luck everybody, and let's try and get at least 5 positions away if we can. It looks like it's broke some structure here on this last candle as well, last 5-minute candle. So I'm going to say there's plenty of scope for downside. Look, 35 pips. I don't mind taking 10.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see
got 30 pips set as a potential TP, but let's see. Good luck everybody. It's pushing up. Let's wait for that result. Looks like it's worse than expected on the balance of trade. So I can see US-30 probably taking a push up there. Let's see.
Anybody that says to you, and I won't name names, that says the movie business.
Got some positions away. We're off. We're firing, and we took just our first positions there. Yeah, we managed to get $35 there. Brilliant. Straight off the bat in like 10 seconds. So we see it pull back. We've got a demand zone there. We're bottom of that Fibonacci. It's just wicked out, so we'll try and get another 5 away. We're going to fill them. Let's post that result for them first trades. It's always good to get the first ones out of the way and get some green. Yeah, it's a nice push up there, and we'll just close these next positions out as well. Brilliant. 10 trades done, 10 winners. Oh, we got 2 break-evens there. The broker didn't close me out quick enough. We're still there. Let's have a look. We've still got some pips on that. Balance of trade, like I say, going the reverse.
Did you retire too early? I mean, look at some of these payouts. I absolutely retired too early.
These are going to push higher.
Right here on Bloomberg.
He's going to push on up, got a few more pips. He's going to wick down, expose that wick. That's when he should be jumping in. RSI is pushing up nicely there. It's a nice zone it's trying to come off as well, which is really good. Let's wait and see. Not doing anything yet, let's just post that result. So there was worse than expected, only just, but enough.
Here's some feedback on the Apple debate. So would your tape, cassette, Walkman? Why even buy new things? It's a poor framing of the question. Okay, this ain't Michael. That was the tweet from this ain't Michael, which I assume is Michael. From New York City this morning. Twitter's a special place. Good morning to you. Kelly Lyons, Lisa Bramerton, Jonathan Ferro. TK's going to be back with us tomorrow. Futures down about 1/3 of 1% on the S&P.
Nice rejection out of that zone, pushing back down again now, so that could be the end of the news event. Just that new spike there.
1% on that currency pair. Cable right now 114.35, down 0.75%.
RSI 30. Is it going to reject back up again? Yeah, it's still holding some support there.
This morning. And dollar yen just flirting with 145 over the last 24 hours. Right now 144.63, backing away, harder session 144.99. I think you get the picture. It's all about dollar strength. And joining us now is George Saravelos, global head of FX research over at Deutsche Bank. George, let's start with that dollar strength. What is the #1 dominant driver?
Degree no buy signal though. It would have been nice if we've got a buy signal. You know, there's enough momentum, volume based, to push up. But we might, yeah, like I say, we're caught between a rock and a hard place. You've got two supply demand zones here fighting against each other.
Producer prices are now up 40%.
Let's just see if it's going to push off this bottom. It's 618 as well, so it's a pretty good zone to try and get out of. Pushing up.
The market doesn't really know and is trying to grapple with that question. You mentioned the yen. The BOJ has been doing the Fed equivalent of $1 trillion of QE in recent months. It's now starting to,
there you go, nice push up again.
Basically following a policy of neglect for the yen. It hasn't spoken about the yen for the last 2 months.
So we've got 10 trades away there, so that's pretty good. Well happy with that. It's going to push again. If we get a buy signal, green in green, we can go again. But the balance of trade is perfect because worse than expected news, pre-market, bang, we get a buy. You know, it's just how the market manipulates enough to get us, you know, like I say, we managed to grab in the end there. This is talking about, this is 4 minutes trading. We got 4, 8, 9, 25.
Yeah, so there's some currencies we're even exceeding those and going back to.
We've got about $50. There you go. So that's a great start. $50 in 4 minutes. That's what I like. Now you're seeing the rejection again, so probably going to get a bit of a range now on this. Let's have a look at pound dollar. See what happened there, and of course, as you'd expect, that was a drop because obviously it would be the dollar good. So it drops. It's a buy for the dollar, basically like the 30 going the reverse. So this was your balance of trade candle here. Look, entered there, and again, not a huge win, but again, you could have still got yourself 10 pips there on cable. That might have been the preferable one to trade. It's a bit easier to see. Obviously, on cable, as you can see, we're looking for a buy because we're bottom of our fib. Trend bar's already gone green. Now it's waiting for the RSI to give us that signal for a buy. And we've got 236 and 382, and we've got our Asian line to retest as well, and possibly back to our New York line. So I'm hoping it'll stay here for the next hour. But if we get a move up in time, we'll scalp it. We'll scalp it, that's for sure.
0.9 on the dollar. What's going to stop the yen from going to 150, as we were talking about yesterday? What's going to be the pivot point?
So well done if you caught that.
There is not necessarily some sort of circuit breaker.
So I think there's two things that can prevent extreme moves. Obviously in Japan we are seeing extreme moves because the Bank of Japan, by its policies, actually encouraging yen weakness. But speaking of Europe, there's two things. Number one, the ECB becoming more aggressive, becoming more assertive, talking about the currency. And I don't agree with this argument that if the ECB...
US-30, there you go, there's the push up again, rejection. So it's liking this zone, it's like holding this support.
Much better than what
We just need that trend bar to show some green. I don't see us going any higher than back to this range here, the zone from earlier on. You can zoom out and have a look and see. That's where we had our zone yesterday.
Essentially what you're saying, the ECB
across.
can support the euro by hiking, but that is not necessarily the case for the Bank of England.
I don't see it going back to that zone at all at the moment.
But it's not, interest rate differentials are not the dominant drivers, and we're seeing that the ECB is helping slow down the euro depreciation. But I think to see a big shift, you need a resolution on the energy situation.
So let's balance the trade. Let's just set up our line for the open.
I'm still surprised by the lack of urgency from the Bank of England in terms of this communication, how much more they can do. You've got an inflation picture that's pretty much the worst in the developed world. We are very likely to get very, very sizable fiscal announcements in place that may help inflation in the near term, but they're also going to be highly stimulative. They're not going to allow for any correction on the demand side. So I worry in the UK policy alignment between the fiscal.
So it's a nice bounce. Again, I just don't know if it's going to hit this and drop. So it's not a. It's a bit of a risky trade to take at the moment. Hence why I'm hanging, just waiting.
How harmful? I mean, what probability would you put around?
Waiting for NY Open now. And that will be our final trade. Quick session. If we see something between now and then in 50 minutes, then we'll take it. Otherwise, we'll just wait for the open. There's no panic. We traded this successfully. And we've got our NY. I'm just hoping cable will stick around here at that 114. It hits 114.8, retests, and then we get a drop further down. That's, again, we'll just wait. NAS, yep, exactly the same. NAS, actually, we've got a buy signal now. Look, NAS pretty good. Could have got in on there on the NAS. It's going to hit 382, so you're a bit late to the party on this one. If it breaks it, then we're going up to 236. We've got a green on the trend bar, so this could be a good insight that US-30 is going to do. Yeah, US-30, here you go, you see.
Fiscal policy could support the euro. And I want to go back to that. What does the appropriate policy look like?
Let's have a look and see if this is going to push up.
Really struggling. This is not like $5 a barrel of gasoline or $5 a gallon gasoline in the United States. This is way more extreme, way more punitive for households over in Europe. Can they not offset it at all?
It's
and
going to push.
If they do, is there something that's prudent that could still support the euro?
Brilliant. We'll take that. And that was $27 there. We jumped in on that signal. Perfect. Why? Because we know we're going reverse of the news. We know we're going to hit 382 and get out of the trade. That was it. We'll wait. So that was another. Yeah, it was about $30 there. That's pretty good.
Has been quite impressive in that front, in that you have seen the situation is very extreme in terms of the price rises, but you are seeing demand management. Industrial demand in Germany for gas has dropped by 20%. At the same time,
perfect signal.
For low-income households, but fiscal policy is not below.
And again, I didn't want to hang around because you can see it will reject some kind of rejection on that 382. If we're at the bottom of the fib, I would hold, but we're not. We're in golden zone territory, reversal territory. You know, 618, 382. Here we go. Look, it's going to pull back. So for those who are inexperienced, will get scared again. This could break.
Finally, George, if we could
you know.
leave Europe and head back to Asia, because you've mentioned the Japanese
yen. Again, that's a nice win.
With 145 to the dollar this morning, the weakest level we have seen going back to August of 1998. And you've also alluded to the
so we're up about. We're getting on for $100 in 10 minutes. Brilliant.
Keep it easy. We're going to keep yield curve control. Is there a level on dollar yen?
And remember, when you're using the smallest lot size, I'm not using Lambos or anything crazy. I'm using the smallest lot size I can use in my broker, and that's it's giving me 10 cents a pip. It's a margin of 136. So you know, this is the kind of stuff you can be dealing with a $400 or $500 account.
What do you think is the future of the US dollar?
As you saw, there was no drawdown. It was pretty much straight there, which is why I like trading the opens and the news events, because as long as you get the direction right, you should get green and then get out the trade.
For much longer than we probably admit.
Even traded foreign exchange yen has not got it done.
What's worked this year? I mean, honestly, everything has gotten flipped on its head multiple times. Remember a couple months ago, people were saying duration, go into long bonds. Well, guess what? That hasn't been that great in the past couple weeks.
Whisper it, say it loud. US dollars worked out. Katie, where did that poll wrap up?
Oh, it's ongoing, John, but we have more than 500 votes, and still 3/4 of people are saying.
So like I said, it's in the golden zone on the fib now, look, so this is why you've got to wait.
Can I say thank you on a serious note? Thank you for putting in the extra shift. We appreciate it. Just fantastic to have you with us on the programme.
Always, John.
TK is going to be back with us tomorrow with Lisa Abramovitz. I'm Jonathan Ferro. Coming up as we count you down to the Open, Chris Harvey of Wells Fargo, Gagi Chowdhury of BlackRock, Jay Poloski of TPW Advisory on a big ECB decision and dollar dominance. That's coming up. This is Bloomberg.
It's true.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Russia's President Vladimir Putin blamed Western nations for the shutdown of Nord Stream natural gas pipeline. Putin told a forum in Vladivostok that gas flows to Europe could resume as soon as sanctions are lifted and Russia can get the pipeline's turbines serviced. He said, quote, "Give us turbines and we'll turn on Nord Stream tomorrow." US officials say that Russia wants to buy millions of rockets and artillery shells from North Korea. It's the latest sign that Moscow is being pressured by international sanctions. There's no indication that any weapon sales have been completed. Last month, the CIA said Russia had approached Iran to buy armed drones. Bloomberg's learned that former White House strategist Steve Bannon will surrender Thursday to face criminal charges in New York. Last year, Manhattan prosecutors were investigating whether Bannon defrauded investors in the We Built the Wall project. Donald Trump pardoned Bannon after he was charged with federal fraud charges in the alleged scheme, but that pardon doesn't cover state charges.
Cable, yep, doing exactly what I want it to do. Holding, I'm just going to post that into the group.
State imposed the highest level of energy emergency. Consumers were urged to turn off lights and curb air conditioners. Triple-digit temperatures pushed demand for electricity to a record. Authorities are preparing for more pressure on the power system today. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
That's set up later for a nice buy, we hope.
Right now, the dollar strength is as much a good thing as it is a bad thing. But fast forward 6-9 months, euro maybe at 90 cents, dollar yen at 150. Maybe the calculus changes and we start to talk about coordinated intervention. I don't think we can rule this out.
What is the breaking point for the dollar as the dollar hits the highest level on the broad-weighted index since 2002? Eric Nelson of MacroStrategist at Wells Fargo Securities weighing in on just that. And one of the biggest factors in deciding the dollar's strength and just how far it can go and what central banks have to do to fight
US-30, yeah, just ranging around there.
Story, which has been a mystery. It has been incredibly difficult to get the story right. Bloomberg's Alex Steele has been surveying all of the chief executive officers of big energy companies at Barclays CEO Energy Power Conference in New York. She is joining us now with Ryan Lance, Conoco CEO. Alex, cannot wait to hear what you have to say.
Lisa, thanks very much.
Well, good for basically 30 pips on that buy. It's great. We just took it in 3 blocks of 5 trades. Now waiting, looking for a pullback.
Particularly important in the midst of an energy and gas crisis over in Europe. Ryan, it's really good to see you in person.
Thank you. Great to be here, Alex.
Speaking of, you just returned to Europe. Ursula von der Leyen said today, talked about a solidarity contribution from fossil fuel companies in order to help pay for the energy crisis. What's your response? What are you thinking when it comes to Europe?
Yeah, you know, it's a whole different conversation going on in Europe today than it was 1 year ago. Certainly energy security has elevated its position, and certainly we're going through a transition. We have to do it more sustainably, and I think they're struggling with how to write.
Again, prices should get trapped. Hopefully, I'm just hoping it'll just stay trapped between these, the supply and the demand zones. Just a bit of a fight. We had the news release, and then there was the buy, and then that's it. We got out, in and out. Like I said, the 382, you'd expect it to reject, play around now between this golden zone before making a move. And overall, we're bearish, as you can see on the bigger trend, RSI. Our trend bar, so you know, be under no illusions about any major move to the upside, which I think if we do, it's into this grey zone from yesterday.
So for you, you're an oil company.
At the moment, we're just dropping.
Really, you're like a mini major. I mean, the kind of investments
we're looking for the next reversal, so we'll just wait. If it doesn't happen, we will be on the open, and that will be our final trades off the day.
Hydrogen plant, and I say all this because what's your runway to profit from LNG right now?
Well, we looked at, so we stepped back, did a couple of transactions over the last couple of years, dramatically grew our U.S. lower 48 position through the Contra acquisition and some Shell acquisition. And when we did that, we knew that our gas production was going to be rising over time, over long term. And we're also very bullish on the LNG market. Gas as a transition fuel sitting in the energy transition. So that led our discussions to wanting to increase our position in Qatar, grow our position in Australia, and then ultimately we wanted an LNG position here in the U.S. so our gas doesn't get stranded and we can take advantage of some of the arbitrage we see going on long term, because we see it as a very good long-term position. That was what led us to this recent decision to partner with Sempra at Port Arthur and grow that. It's got some option value for their West Coast LNG position, as well as grow further in the LNG side in the Gulf Coast. And then most recently, you referred to the JERA. This is working with a customer that we've known for 45 years, who is trying to transition and interested in hydrogen, both green and blue hydrogen. So it's a deal where we're going to look at together. We know how to inject CO2 back into the ground. We have the resource, the land position in the Gulf Coast to do that. We own the land. Working with them to try to understand, is there a business that we can create?
The world can be a noisy place. Prices are set to soar. But what if under all the noise was opportunity? Join more than 3 million users in over 100 countries and be empowered with Capital.com.
There that can give us decent returns on our business and satisfy their long-term need on the transition.
So what's next on Ryan's list? What other kind of partnerships? What other kind of opportunities?
Nice sell signal. Again, I'm looking to take a trade on it. No, just because, like I say, I want to see, you know, just dangerous taking trades inside a fib golden zone unless there's some kind of catalyst news event or whatever, which there was. You know, that's why we took the buy here. We just blindly trade a signal. We knew the balance of trade news was reversed. So, you know, when you get this sell signal here, you know, people might dive in on it. You know, there is pivots to be had. It is overall all synced together. It's phased in and out though. You know, I just don't trust a zone like this. It's just going to be ranging. We want a clean break and then to trade a reversal. So at the moment there's nothing there. It's still pulling back possibly. Sell signal again.
At what point do you think that you'd siphon off more capex?
This way you've got to be disciplined as a trader just to hold.
Here versus say oil. Is there ever going to come a time where that happens?
If we get a break of 618 down to 786, then we can trade that possibly, and then we'll look for the bounce from the bottom of the fib back up again. Like I say, I expect it to range a little bit. Look, same as the pound dollar. Look, again, we're going from, you know, one red candle to green to red to green. It's just time to sit on the hands. We'll watch US-30 though.
Obviously, all of that is in support truly of being able to return cash to shareholders as well, which is the industry theme. You got to grow, you got to be in the right energy space, and you got to deliver.
See, you can see how these signals repaint. So they want to make them stick. That you can get an alert, at least to give you the heads up that a sell might be possible. But at the moment, it's, yeah, I'm not seeing it.
So I think what the underlying principle around that is that you better have a portfolio that you can grow and develop your company on less than 70% of your cash flow. And you need to do that at a mid-cycle price. You can't do that. It's easy to do at $100, $120 oil. The question is, what can you do at $50 and $60 and or a mid-cycle price going long-term in this business? So that's our commitment. We've worked really hard over the last number of years to get our portfolio in a place that where we can only invest 70% of our cash flow and we can grow the company on that. So we're taking care of our growth, we're taking care of our shareholder, we're keeping a balance sheet that's really strong because the volatility is going to be in this business, and you got to have a strong balance sheet to manage it.
Is there going to come a point where you think that companies are spending too much on distribution to shareholders and not enough investing?
Well, I think people that have a free cash flow model that sets their distribution have to be careful, because that could artificially suppress capital to where they're not growing their company and they're giving a bunch back to the shareholder. Our model is off our cash flow. So, you know, it's kind of indifferent of what the capital program is going to be. We have a commitment to what our cash flow is going to be in delivering 30% that back to the shareholder. I think some of the other companies have to be careful that formulaically give back a bunch of cash to shareholders that are based on a free cash flow model, because their tendency won't let their capital rise, you know, to really grow and develop their companies.
And then along the same lines, do you think we get back to $50 oil? Do we get back to like $2 natural gas?
I don't think $2 natural gas is in our future. I think mid-cycle prices are much higher than that. Will we get back to 50 to 60? you know, there's times that we probably will see that. I don't think we're going to see that in the short term. In the near term, 2, 3, 4 years. I'm pretty constructive in the market. I just think the supply-demand fundamentals today are driving us to these kinds of prices. So that's the world we're going to be living in for the next few years.
Do you see any sort of demand weakness from China, from Europe? Like, are there recessionary signals that are blinking for you?
Yeah, certainly on the demand side, COVID coming back and you know, impacting China, the recession, inflationary forces are impacting, suppressing some of the demand growth. But then you look on the supply side, supply's having a tough time to keep up. OECD inventories are at their lowest level they've been in 5 and 10 years. So we've got to rebuild inventory. We're putting a bunch of SPR barrels into the market today. That's limited in its duration, propping up the supply. What happens when that those barrels leave the market? So there's a lot of conflicting data out there, and it all says, you know, we're going to see these kind of elevated prices for a while.
To that point, your cost inputs for next year. I know you guys are still working on your budgets and stuff for next year, but do you have an idea of how much higher costs are going to be next year versus this year?
Well, I think globally we're seeing inflation rates that I would call in the 7 to 8% range around the whole company. So you will see some reset of capital programs and operating programs as we go forward. Now, if you're a pure play in the Permian Basin, you're seeing much higher inflation rates, probably high teens kinds of inflation rates sitting, you know, in the Permian Basin today. We see that.
Sell signal looks like it's sticking now, pushing down.
The advantage we have is being a global diverse company. We can mute some of those higher inflation rates in some of our activity.
Hitting that 618 look perfect. This is good to watch. Like I say, and just sit on your hands. It's not FOMO, it's not missing out. These are risky trades if someone was to take them. You just want to see the price action and see how, if it respects the fib levels that you've got and the structure we're looking at as we get towards the open, and then you're more confident in taking a position on the open.
Such an uncertain backdrop, not only when it comes to the supply-demand backdrop, but also with respect to policy at a time when Europe and the U.S. are both trying to keep things under control. That was Ryan Lance, the ConocoPhillips CEO. So I've got a question, Kaylee. I'm looking right now at oil prices at the lowest level since January, crude, both Brent and WTI, and I am still finding the why a little bit difficult, right? And we were talking about this with Ed Morse earlier this morning. He was saying the why is less China than you might think. It is also Europe. It is also the U.S. How much is that really what we're seeing? Yeah,
If this pushes down to 786, we could get a nice push back up again. No confirmation on that yet.
With the CEO of Deutsche Bank saying a recession is inevitable.
We're just watching.
Andrew Bailey of the Bank of England essentially saying the same thing about the UK, that it's the most likely scenario. So no longer does this just seem like a China-centric problem. Global economies around the world are dealing with a slowdown, potentially a major one in growth, and ultimately it tracks that
Cable perfectly. Just wanted to sit there, don't want to do anything until it explodes on our trade. That'd be nice. US-30, as I said, look, hit that 618, pulled up. It's nice to watch it. Just respect them fibs so you trust it as a trader. When you see price action, trusting your analysis, trusting your levels, support, resistance, or whatever you're using, then you're more likely to take a trade. That's as simple as that. But if you don't think you've got any confidence in price, respecting your zones you're set in, then obviously you're going to have problems. So even if you don't take a trade, it's worth watching how price reacts to build that confidence.
Mike Worth to really push this conversation forward in terms of the supply
and
dynamic, what they're planning for, and the
back to 5
potential for
0.5
taxes and what they'll do with that. This is Bloomberg.
There you go. It's going to hit that 5 and then it's going to pop down again, or it's going to break it and go up to 382.
Garcia clinched her 13th straight victory with a dominant display to end Coco Gauff's hopes of a maiden major crown. The French woman was in total control against the American. After jumping out to a 4-love lead, she did not look back, closing it out 6-4 in the second set. Garcia moving on to the semis and singles for the first time at a slam. She'll face Ange Jabeur for a spot in the final after she took out Ayla Tomljanovic. 29 winners in the victory, which was her 43rd match win of the year. Only world number 1, Iga Swiatek, has more on the WTA Tour. The Tunisian becomes the first African woman to reach the final.
So I'm a terrible trader, right? But last night,
you should be watching us then.
Now don't forget, tennis
Right.
live at the US Open has all the news you need. It all starts at 9 a.m. Eastern. I'm Jamie Magic.
Oh yes, we'll watch that later. Right, back to trading. So yeah, here we go. The bounce up 618. Now it's going to pull down again, I think 500. This is just what happens in the golden zone. Price just consolidating and then waiting to take a break above 382 or below 618. And we hope it holds like this for the next 30 minutes for the open, and then we get a nice move on the open, which could go the opposite to what we took on the balance of trade. So we're going to be looking for sales, as it was a worse than expected news. And you sometimes usually find that it'll go reverse manipulation before the market opens, and then it will drop and go the way of the news on the NY Open. Not always, but it's a high percentage that it does that. So you keep that in mind anyway. If you get a sell signal or everything's looking red still, there's a high percentage price is going to go down, at least to grab, you know, your 10 pips, whatever you want to get. So a decent level of resistance. Is it going to break it? Getting towards that yellow line, which is the open. I just don't want to be caught in any kind of trades at the moment, so it's pushed up nicely.
Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go...
Oil still dropping. Let's hit the bottom, get into that 786 on the fib look. That could be a nice trade on the sell. We've got Hakanashi on these just to level it all out. NAS exactly the same as US-30, so you could have traded NAS the same way we just traded the 30. They're really synced today. As you can see, the pattern of the candles, the signals we've got are exactly the same. So if you've got a smaller account, you can do this on NAS pretty much. US-30, especially on IC markets, is the one you need to have the most money for in your account to be able to trade it. And like I always say, you need to be able to have room so you can open a minimum of 5 to 10 positions, so you can dig yourself out of a hole by trading the right way if you've gone the wrong way, and leaving yourself a bit of spare to accept some drawdown. If you're tight, like I say, with 1 or 2 trades, that's how most people blow their accounts. They just instantly go to drawdown, over leverage, and straight away there it's all over. They've just got to close out their trade and a loss. There's no room to try and win it back.
This is Bloomberg. Markets are preparing to close, but the day is not over yet.
Stock that is now up about 45%.
A lot of volatility right now.
You need the power of the Bloomberg terminal to get you market-moving data before anyone else.
These numbers are much higher than expected.
Upgraded today to overweight.
You need top analysts to bring you exclusive global insight into cross-asset markets.
The muni bond market.
China is a really big focus.
Bitcoin ain't playing along today.
It's going to be short term.
Bloomberg Markets, The Close. Weekdays on Bloomberg.
Seven-day losing streak on the NASDAQ Composite. It has been brutal over the last week. From New York City this morning, good morning, good morning. Looking for a bounce and getting a drop. We're down 0.2 on the S&P. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York, we begin with the big issue, dollar dominance.
The strength of the dollar.
The strong dollar.
Unrelenting US dollar strength.
What it really tells you is that it reflects the strength of the U.S. economy.
The U.S. economy is faring better than the rest of the world.
Compared to Europe, compared to emerging markets, compared to China.
Currency is a big, element here.
The dollar is particularly strong.
At some point in the first quarter of 2023, that U.S. dollar is going to peak.
Valuation is pretty stretched.
And when that happens and the US dollar weakens,
I think it could turn quite quickly.
It's creating ripple effects across assets.
But in the short term, and again into Q4 particularly,
Europe is in big trouble. The recession in Europe and the energy crisis that is brewing.
Europe and the UK is so utterly pernicious. It's so no-win.
I think the strong dollar is here to stay over the near term.
The dollar is going to be king for a good few months.
It's the king right now, that's for sure. Joining us now is BlackRock's Gargi Chowdhury and TPW's Jay Pawlowski. Gargi, let's start there. Is it too early to fade this dollar strength story?
Good morning, Jonathan. It's great to be here. It might be a bit too early. I think we're still going to see some more weakness, especially out of Europe, given the nat gas and energy crisis that's ongoing. That's obviously around the dollar story. It's not about rates. It's not about what the different central banks are doing. It's all about that safe haven. And on a year like this, when we haven't had positive performance in either equities or bonds, the dollar has been the best hedge. I think the end is near, though. I don't know whether it's this month or the next month. I do think the end is near. So for those investors that have been waiting on the sidelines to perhaps go into, for example, local currency EM debt, I do think we're about to get there, but perhaps a little too early as we continue to get some poor data and more unfortunate news on terms of energy out of Europe.
Gargi, the timing is questionable. Let's talk about the reason. What's the catalyst? Why do you think the end is near?
Well, number one, we've obviously seen
just watching this and play out. We've just got 7 minutes to go.
Reasons for this move was this idea that US would be the best among some of the other DM economies that are obviously slowing down. So perhaps part of that has begun to get priced in. So part of that is just the pricing in. Was this the, thinking back to January of this year, this is exactly what we would have expected would happen if the US was doing better than perhaps Europe, the UK, etc. So part of that is pricing. Another reason I think is that by the end of this year, we will see the Fed having done most of, or at least my view is that they'll have done most of the hiking that they're supposed to do. We've already fully priced for them to go about 75 for this meeting, 50, and then a 25. I think that's the end of that cycle. I doubt that they're going to go much higher than that, and that's another reason why we could see a stabilization in the US dollar.
A dollar right now very close to 111 on the dollar index. Jordan Rochester over at Nomura making some headlines in the last week with some big calls on the euro and on sterling. He says this: the problem started in energy. It will end there. Everything else is pretty much noise for now. Expect euro dollar at 90 cents by year end, sterling at 106 by year end. Euro dollar right now 98.87, cable 114.28. Jay, you are the perfect guest to talk about this with. Europe. You think peak fear in terms of the European energy story is here? Is that it then for the euro story, for this sterling weakness we've seen over the last year?
Well, I don't know about sterling, John, because I think what we're seeing here is the downside of Brexit and the UK decision to go it alone. This is not a crisis where you want to be alone. Clearly, the EU is going to attack this from a regional basis, from a integration basis. It's too big for any one country. So no strong feelings on sterling. They're on their own. Good luck. On the euro, yes, I think we've already passed peak fear. John, we had Russia shut the Nord Stream 1 pipeline. They shut it. And what happened? Gas prices fell. They're off 35% from the high. We're done with the European gas prices. And I do think that that means that the euro is going to strengthen from here. You are going to see the ECB raise probably 75 basis points. They're going to be raising rates more in 2023 than the Fed is, and that's going to provide strength for the euro. I think buying the euro here is, if you have a 6 to 12 month view, is a pretty attractive option.
Trade for the brave right now for some people. Jay, let's unpack some of that. I'll get to the ECB call in just a moment. You think we're done on the energy side? Some people might say, Jay, well, we haven't seen the blackouts yet. We expect we will. Other people might say, we're waiting for industry shutdowns in places like Germany through the winter. This could get a whole lot worse. Why do you think that might not be the case?
Because I think the markets are forward-looking. We've already thought about all that stuff. We've already discounted all of that. The biggest fear, the number one fear, was that Russia would shut off the gas. Now, thankfully, in a way, they've done it.
I was going to top my coffee up. Back in 10 minutes.
And guess what? It's not all that horrible. Gas prices are going down, not up. If there was such a shortage of gas, John, even in the out months, and by the way, the forward contracts have not gone up as a result of the Russian shut-in either. So if there was a big fear of gas shortages coming over time, it would be manifested. And I don't think that's going to be the case. Instead, what we're seeing actually is Europe coming together again in a crisis. We're going to see the energy ministers meet on the 9th. They're going to come up with the EU-wide plan. They're going to cover this situation, and they're going to emerge stronger from it. I continue to be impressed by how Europe is dealing with the situation, again, virtually against all other opinion. And to me, this is really a signal that Europe is going to get its energy system in place. It's going to be out of the Russian clutches, and it's going to be a clean energy leader that is going to have a great opportunity to surprise people to the upside in the coming years. I'm continue to be strategically on a 1, 3, 5-year basis. I think Europe is extremely attractive. 28 straight weeks of equity fund outflows, 12-month forward PE of 11.5 times versus 17 for the U.S. Earnings upgrades, John, more earnings upgrades in Europe than downgrades currently. Going forward for the rest of this year. There's a lot that is, relatively positive. If you like, markets that other people hate, if you like cheap markets, if you like things that are on a turn, I think we're about to see the peak of the dollar. The Fed raising rates 75 basis points next week. That's going to be it for the front loading. That's going to mark the dollar peak. And that's going to set off all sorts of asset allocation changes.
Gagi, I'm sure you're listening to this and itching to get in, so please jump in. My question to you would be, is it too early to look ahead to spring before we've even had winter in Europe?
So the one thing that I'd make, and obviously, there are some good points made around, we have already seen the shutdown of Nord Stream, and perhaps that was the biggest concern. But what we haven't seen so far is the severity of winter. And obviously, we all hope that it's going to turn out to be a pretty normal winter and the demand for energy will not be, 15, 20% above normal, but we just don't know. And we won't know that for some time, which is why I still think that obviously there's going to be a point at which, to the other guest's point, there's going to be a peak in the dollar, and perhaps you do want to get back into the euro. I just don't think that's yet. I mean, today we got the GDP print, and we're still, obviously we know that's backward looking. We're still looking at very solid consumption out of European consumers. That's obviously not going to be the case as we look at data out for this quarter and the next. So I hope that it doesn't turn out to be this way, but unfortunately, it's still too early, especially on the weather front, which is obviously going to be a big driver on the demand for energy.
Futures right now down about 1/10%. The big story over the last couple of days, the dollar dominance. Euro dollar 98.89. We're down about 1/10% on that currency pair. Sterling 114.21. Taking a look at it is Taylor Riggs. Hey, Taylor.
Hey, John. And not only looking at cross currencies, but the correlation with real rates as well. I think really surprising. We are firmly out of sort of the negative territory and looking at some big real yields that are rising 84 basis points or so here on the 10-year real yield, along with sort of that dollar strength that you've been talking really all morning about. I think the interesting cross-asset correlation continues to be then what happens within the equity markets. At the top, you mentioned NASDAQ now looking at 7 straight days of declines. Well, global equities are down now for about 9 straight days. That is the longest streak going back in about 11 years. You're really starting to see at least global equities roll over just a little bit as we think about some of that dollar strength underway. Finally, the further cross-asset correlations, maybe no surprise here, given that more traditional correlation that you see with dollar strength. You get commodities rolling over. Really, that chart shows it when we think about the last 2 weeks.
Taylor, thank you. Gagi, I want to come to you on some comments from Tom Barkin over at the Richmond Fed and the FT. He said the destination and real rates in positive territory, and my intent would be to maintain them there until we're convinced that we've put inflation to bed. Gagi, you see opportunities in EM, and I just wonder how uncomfortable the real rate story and how determined this Fed is to keep them there, how uncomfortable that makes you.
Yeah, so we've definitely, we heard a very strong and clear message from Chair Powell in the end of August at the Jackson Hole. They're telling us that they really want to push back on any rate cuts in 2023. Fine, the market obviously repriced immediately. And what they're telling us, and it's not just obviously Powell, it's every other speaker that's spoken since then, they've united to tell us that rates are going to be higher for longer. But what that means to me, though, this higher for longer story, is that it's a good time to own carry. So if you are higher, if you reset, if the market's already priced that, so we're obviously already pricing in close to 3.8% on the Fed funds rate. Perhaps it goes a little bit higher than that. I don't think so. But even if we price in about close to 4%, and then if we stay there, I think that's a Fed telling you to own carry. And one of the highest conviction trades I have going into now to the end of the year is actually the front end of high quality credit. So looking at IGSB, which really gives you access to investment grade credit in the front end of the curve, earning close to 5%, that's the yield of dreams.
The yield of dreams. Jay, do you agree?
I've got one to top that. How about Asian high yield, which yields 9% in dollars and pays monthly? That's one of our favorites. We have many that we like. We like the pipelines AMLP, which has a yield of about 7% and gives you exposure to the energy side as well. But I just want to pick up on the point about opportunities in fixed income, and particularly in emerging markets. We're actually getting more bullish on emerging markets in this environment. John, as you know, we've talked about it. We have a view of a high nominal growth world supported by a global capex boom to deal with the 3 C's of COVID, climate, and conflict. And we think emerging markets are going to be a big winner in that. And it's interesting to note, I just took a look before getting on the air here, over the last month, EM has been a pretty significant outperformer, with the S&P down, as we know, about 5-6%, ACWI ex-US down about 6 or 7%, EM broadly down 4%, Brazil is flat, Southeast Asia down 2%, and the best performing fixed income instrument we've had over the last month is that Asian high yield ETF I mentioned. 30% China property, John. You read the headlines, you wouldn't touch China property with a 10-foot pole. Last month was the best month for China high yield in a decade. Best performance in a decade. So there's a tremendous gap between what you read and what the markets are doing in many instances. And we always like to let Mr. Market tell us rather than us try to tell Mr. Market.
Jay Pawlowski, we'll talk more about Mr. Market in just a moment. Gargi Chowdhury alongside us as well. Jay Pawlowski, so constructive on the major issues that everyone else is very, very bearish about. I can tell you on crude right now, dropped below 85 for the first time since January. On WTI. Futures right now on the S&P down about 0.2%. Yields a little bit lower as well. With some movers, here's Abby.
John, let's start out with a stock that's moving in the opposite direction of futures and perhaps will turn the markets around. Maybe, of course, I'm talking about Apple, the big heavyweight to each of the indexes. This on their big product unveil day, up about 0.2%. It will be interesting to see how this stock trades. Typically, it does climb on the day when the new iPhone is revealed, and of course, there is a price hike expected. Pinterest up 4.1%, upgraded over at Wolf to outperform on improving fundamentals and positive catalysts despite an uncertain economy. United Airlines unchanged right now. They, of course, in a filing lifted their sales and margin outlook. Demand is stronger than expected. Separately, they are threatening JFK if regulators fail to allow them to expand their schedule. And then finally, John, Peloton down 1.7%. This on another filing around the company updating the warnings, the treadmill, Tread Plus, unfortunate child death, and the consumer agencies saying that they gave insufficient warnings that perhaps there's going to be some sort of financial responsibility there, John.
Abby, thank you. A story no doubt we'll look at again through the Down Bloomberg TV and radio. Coming up, the EU considering radical measures to curb soaring energy prices.
We are now confronted with astronomical electricity prices for households and companies, and with an enormous market volatility. Therefore, we will put forward a set of...
Our lives are a hive of activity. So why does most health and life insurance just stand there, doing nothing?
Our insurance doesn't just protect you, it also rewards you when you get active, with everything from weekly coffees to half-price gym membership. And right now, you'll even get up to 2 months cash back on your premiums.
Of 5 different immediate measures.
that conversation up next.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. When U.S. jobs numbers are released,
Numbers are pretty much in line with what Wall Street expected.
Bloomberg brings you crucial data at terminal speed.
315,000 jobs created an optimistic number for the Federal Reserve.
And instant expert analysis.
Dare I say that this might be called a Goldilocks jobs report?
What this does is really push away a lot of the arch gloom.
Maybe leading us toward a soft landing.
The Fed is still going to be debating 50 or 75 basis points.
Nobody covers jobs.
And we're back. Here we go. Right, we've got 10 minutes to go to the open. Let's have a quick look where we are. And yes, US-30 exactly where we left it. Again, around that 618,382 zone on the fib. So building up nicely for the open, which is what I like to see. So we're going to get an explosion and move. Got a little bicycle and move now. We should see a rejection on 382. We have actually got green on the trend at last, and we're into the neutral zone. So this could well be the start of a move before we get to the open.
On Russian gas, here the objective is we must cut Russia's
Get rid of that line now. We're almost there. Final trades of the day.
The EU unveiling emergency measures to ease soaring energy prices, including the price cap on non-gas power and on Russian gas. This after President
Get ready, everybody.
Oil and gas to any nation capping Russian commodities. Team coverage starts right now with Will Kennedy.
Cable still where we need it to be.
Well, first to you, sir. Can you walk me through the separate plans, what we're hearing from the UK and what you've heard from the Europeans?
So there's a
No surprise there.
European Union, which is going to be discussed at the
So we're at 10 minutes. We'll just watch and see where we're going to be entering.
I think notably a price cap on power that's generated from non-gas sources, so nuclear, renewables, hydropower at 200 megawatts an hour. Obviously, that's still quite a high price by power for by historical standards, but a lot lower than some of the prices we've seen. Also, stronger mandates on demand reduction and a possible levy on fossil fuel companies. Two other aspects which are interesting. First, liquidity support for the market. Now, I think that's important because if it's strong, it may stop some of these very volatile moves we've seen in gas and power in Europe. If people have confidence that governments are standing behind players in the market, and it may help smooth out some of the volatility. And finally, there's a cap on Russian gas. Now, that ultimately looks like the most headline-grabbing part of the package, but may prove to be one of the less significant parts because as someone else pointed out earlier today, only 9% of Europe's gas is now coming from Russia after the Nord Stream pipeline was shut down.
That's an amazing drop-off from where it was before. Javier, one thing you've written about on Bloomberg Opinion repeatedly is curtailing demand, destruction and rationing. Where's that in all of this, Javier?
Well, the European Union is putting a plan that it will mandate a 10 to 15% reduction in electricity demand across the continent. It's very unclear how that's going to happen. Certainly, with the measures that the European Union is announcing, the market is not going to longer be rationing the demand, and governments are going to have to do it. So mandates are going to have to be imposed. And I suppose that governments, at the end of the day, the big consumer of electricity in Europe everywhere is the industrial sector. Governments will have to tell industries when and what they can produce. That is going to be quite an interesting experiment to watch from outside, but that's where we are heading at the moment, because this plan of the European Union does not work unless you bring demand down.
Javier Blas, alongside Will Kennedy, to the both of you, thank you. Just looking at crude drop away by 3% on Brent crude right now at 89.95. It's a break of 90 for the first time since February. A little bit earlier this morning, a break of 85 on WTI. Got that right now at 83.85. We're down 3.5% there. Final comment now from Gaki Chowdhury, Jay Poloski. Jay, you're very constructive on the European story. I'm slightly more concerned about transferring risk to the sovereign with unlimited liability in places like the UK. You were very keen to separate the UK from Europe. Just in a couple of words, can you tell me, Jay, why you think the pain might be more acute in the United Kingdom as compared to the rest of the European continent?
Well, because they don't have the ability to come together and act collectively, as Ursula von der Leyen just did. I mean, John, here's the deal. After COVID and now with the crisis, the EU front and center in Europe acting collectively, and the euro is an expression of that. And therefore, seeing that action, two big deals, Europe is going to be transformed by this. And the euro is that expression. You can buy it at 99 cents on the dollar. It's a pretty attractive deal to me. On the UK front, it's by itself. It's going to struggle to deal with all these issues. It's in a place with very few friends, and therefore
buy signal still there. So obviously, if the buy signal sticks and we get a move up on the open, we can look to take buys. That 2.5 and maybe to the top of the fib. If suddenly it switches to a sell and we go red, then we're looking to take sells. But let's see, it's looking good at the moment. We've got about 5 minutes to go. Cable exactly where we need it to be. So these will be our final trades today. And that's what you have to do, sit and wait. It's just as simple as. If you want to be a daytime scalper, waiting for the right moment.
Over 2%. I just don't see how they get there. Obviously, they're going to go 75 tomorrow, and they're probably going to get to 1.25 very quickly. But they're going to have to do this at the same time that they see the data really weakening in a meaningful manner and people suffering on the streets. I think it's going to be very hard for them to get much above that 1.25 to 1.5%. So not likely to realize what is currently in the price in the market, especially for Europe.
Gaki Chowdhury, Jay Poloski, to the two of you, thank you. Jay's so constructive. You wanted a bull, there's a bull coming up.
What do you think is the future of the US dollar?
For the next 50 years, you are absolutely going to see a monetary revolution. But what you're going to see in the short to medium term is the strongest fiat currencies will hold on for much longer than we probably admit.
The morning calls, and later, Wells Fargo's Chris Harvey expecting stocks to move higher into year end. Another more constructive view around the opening bell coming up.
A lot of the satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
Four minutes away from the opening bow, futures down by about 0.1% on the S&P. Here are your morning calls. First up, Wolf Research upgrading Pinterest to outperform, seeing significant long-term upside to both user growth and monetization. MChem Partners downgrading Electronic Arts to neutral, expecting shares to be range-bound with limited catalysts on the horizon. And finally, Macquarie upgrading Netflix to neutral, 230 price target, highlighting the company's strengthening ad sales projections. Coming up, Wells Fargo's Chris Harvey expecting stocks to move higher as investors shift back into growth. That conversation up next. The opening bell just around the corner.
Here we go, get ready everybody. Just making sure we're logged in, US-30, we're good. There we go, 30 seconds to go. Good luck on the open, let's see which one, which way it flies.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
It's one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid.
What's going to see, we're going to get a push down. Green on the trend bar, he's going to break that zone. Just wait, got no signal yet.
Many in the scientific community predict fusion power.
It's looking to find its level. RSI's in the neutral zone. Still ranging, still no move yet. Fighting. Looking bearish, and we're going to get it. We're going to get a push down. It's going to go the way of the news, is it? Which is what we wanted. Trying to fill positions.
Talk about the future of the entertainment business. Where do you think it's going? You think there's going to be movie theaters forever?
Anybody that says to you, and I won't name names, that says the movie business is over, are fools.
It's ranging around, trying to find its level. Go, waiting to see. Green, green, green. Still no move yet. Still trapped right between that 382 and 500. Look at that. It's sinking down. Some manipulation going off here, just waiting. Not took any positions yet. Say sometimes it could be a non-starter.
Seconds away from the opening bow this morning. Good morning to you all. This is the state of play right now. This Wednesday morning, futures down about 1/10% on the S&P. On the NASDAQ.
Let's see if we're going to get a spike down. It's going to push up.
Down by about
There's your spike down.
We're kind of going nowhere. Bit of a churn after 7 days of losses on the NASDAQ Composite. That's the opening bow. Switch at the board and get to the bond market. It's kind of like yesterday upside down. Yields are lower this time by 5 basis points to break at 330 again, 329.58. Euro dollar unchanged at about 99 cents. Sterling anything but unchanged, 114.32.
Just waiting for that move. No signal yet. We're still holding.
On the pound against the US dollar. Crude breaking down as well. We're down 4% here, $83 and about 50 cents on WTI. That's across asset price action with your
Let's have a look at pound dollar. Nice little push up. We're still waiting for that to enter back into the zone. There we go. We're just going to end a load of positions here on this push down.
They did raise guidance for both sales and margin outlooks. Demand is strong there, and of course, earlier you were talking about how crude oil
excellent
broke below 85 for the first time since January. We have Brent crude below 90. On this, the energy complex is weaker.
We're just clearing positions here all the time.
Tesla, but we do have a headline from Tesla.
10 positions done. Just going to see if we're going to get any more on this. There goes the push down.
Much more in the story as the day progresses, John.
Well, we can talk about it right now. Abby, thank you. We can get to San Francisco and catch up with Ed Ludlow for more. Ed, we'll talk about Apple in a moment. Your reaction to this headline? Elon Musk
just going to publish the results there. That was good. We managed to get. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 positions filled there. 10 positions filled on the sell.
Twitter had wanted to start earlier than October. Musk had originally pushed for next year, January or February. The date that they were targeting was October 17th.
On that wick down, I say we're still in that volatile area at the moment, so
felt that Twitter were not forthcoming with specific information. In fact, the accusation from Musk,
let's see if it's going to push down any more.
Deliberately sitting on certain information, and therefore that Musk's team felt they couldn't possibly be ready for an October trial. In the end, this is the news. It's been set, it's been denied, his request to delay until December, so we're moving towards an October date, and I hope to be there in Delaware.
Talk to me about the relevance of this headline, then, Ed. Just build on this for us. He's allowed to use the Twitter whistleblower complaint in the trial. How important is that?
It was nice trade there. It was about $100 there. Yep, 100 in about 1 minute. We're just going to see if we're going to get any more.
Told a court in the pre-trial hearing yesterday was that at the time of his employment, this employee never mentioned.
Still not seen a signal either way.
While he was an employee, they said it was strange that the whistleblower would come out after the fact in the run-up to the hearing. So this is the crux of Musk's.
That's what I wanted to see. That red candle forming. Let's see if we can bag some more. Put some more positions in, trying to get them filled.
At the time he put in the bid. But Twitter have maintained all along that the level of bots is around 5% of all users. They've used that in boilerplate regulatory filing language for a long time. It will be an interesting point of discussion during the trial.
Ed, we've got to talk about Apple as well. New iPhone a little bit later. Sure. Slightly earlier, I'm told, Ed. What are you looking for?
Waiting for that push down.
It's often the worst kept secret in technology, isn't it? Investors go into this event knowing basically what the lineup is, the iPhone 14 next generation. You look over history.
382, ranging around on that 382.
Apple have released a new handset, the shares have gone down. There's nothing really to boost the stock here. What's really important for the street is the emphasis on higher price point pro models. Why? Because you look at that chart.
Going to bounce off 236.
Sales growth in the fiscal first quarter, the December quarter, which is the key Christmas period, set to grow by just 1% year on year. So the street hopes that this higher price point with the pro models boosts that ASP, average selling price, and means that EPS growth will outpace that top line growth. But really interesting, you know I'm a complete nerd for this stuff, John. We want the emphasis on the higher capability camera. We want to know if this is a tease from Apple. Go on Apple's Twitter and look at the logo for this event, the Far Out event. It's the Apple logo is a constellation of stars, and the inference we've taken from that is that we could see new satellite capabilities. Do you remember when you and I used to talk about the...
Let's push up. Now we get the buy signal, so we can put some buys in. See if it's going to retest off that zero at the top of the Fibonacci, and we can get some more sells away. Perfect. So sells to buys. We're just going to close some positions there.
I think that there's a risk with this, right? This higher price point strategy. The street cheers it if it can boost EPS growth, but it comes at a time where the global economy is suffering. You know, Apple has shown some resilience with the changing macro picture because it's relied on middle and higher
Wait to expose some pullback. That's that zone we're looking at there. It's great.
Such as it is, and consumer hesitancy such as it is around the world, there is no guarantee that those consumers will stay through the end of the year as they have done in the first half of this year.
Ed, thank you. I think you dodged the question.
Just going to close some more positions out here.
Katie, you know what I'm talking about. Where's the poll on Twitter? Where are we?
More than 600 votes, 75% of people say, yeah, my phone slows down when the new one comes out. So.
Let's see if this slows down a little bit later. Katie, I wanted to talk about Ed
Brilliant.
Davis. This is what he wrote this morning.
Pulled some sells on that as well. And I got another 1, 2, 3, 4, 5, 6, another 6, 7 trades on the sell there. Top of that wick because we're at the top of the Fibonacci, so I'm looking to sell now.
Retail investors seem to be a lot more bullish than institutional investors are. What Ned Davis took a look at really is just short positions. The gap between the amount of net short contracts between retail and speculators is about 78,500. That is the widest going back to the April to June period of 2020, which noteworthy was not a bad time for stocks. It was right after the COVID market bottom, and historically the S&P has rallied sharply.
So we took sells, buys and sells, and like I say, 3 blocks and I'm done. RSI 62.
Ned Davis says usually means that stock market returns are flat when you get this optimistic this quickly. And as for the street itself, obviously, as we were just looking at there, as the S&P 500 has dropped 18% this year, those targets have come down from 49.50 the average.
And that's NY open done.
43.76 as of August. But the pain hasn't necessarily been concentrated in the S&P 500 alone. It's much more in large cap technology, which is why the NASDAQ 100 is down 8.5% over the last.
Like I said, don't try and outstay my welcome by doing too many. 3 blocks of trades is enough. Got a nice buy signal now. I can see rejection on here, which is good. We'll get some more sells away when we see the confirmation.
Up by 0.4%. One topic, you know what it is. Investors still searching for a bottom.
Yeah, we're looking for that bottom.
And seasonally, September and October tend to be the most volatile times.
September and October are normally when you get markets going down sharply.
September's going to tell us a lot. September tends to be the worst month. A lot of companies throwing the towel for the year.
I wouldn't be surprised if equity markets go down a bit further from here.
Excellent. We just closed some more sells out.
If we're going into recession, then
Say I'm slightly over trading it now. It's just I love it when it gets to the top of a Fibonacci. We're looking for that pullback. So just post those.
Sometime between probably September and December.
More done.
Wake me up when September ends. Chris Harvey of Wells Fargo sees a better path into year end, saying a retest of the lows may not come until the first half of 23. Chris, I'm pleased to say, joined us now. Chris, I think this is where we've got to start with you, and thanks for being with us, by the way, buddy. It's always great to catch up. That is your
nice red candle.
From the big bears out there, that the weakness that they're looking for in earnings at the end of this year, you don't think comes until
RSI pushing back now. Might be able to get some more away. Just wait. Got 4. Yeah, it's a new candle just opened.
kind of roll back the clock, right? So in the summertime, we talked about 4,300 being the high, the big risk being interest rates. Interest rates could move higher. Well, interest rates did move higher. But what's notable about interest rates moving higher is it looks like European rates pulled U.S. rates higher. And why did European rates go higher? Well, it was because of inflation, but really bad decision around energy policy. So
a decent area of resistance, as you can see.
Does that make a whole lot of sense to you? It doesn't to me, right? And at the end of the day, what we need to see, if you're going to get stock to retest the low, you have to start seeing the pre-announcements over the next
Pushing
couple
on
days,
up.
the next couple weeks. If you don't see those pre-announcements, I don't see us retesting the lows. And I have a few more thoughts, but let me stop there. See which direction you want to go in.
Well, Chris, let me pick up on what you've been talking about in your notes, and that's corporate outreach, the roadshows, the conferences.
Now let's pull in. Let's have a look at cable because we're almost there. Cable's going to get back to that Asian line. We'll look to take further buys back to the New York line as well. So it's looking really good.
The head of our corporate access came to me and said, Chris, one of the things we're not seeing is we're not seeing the corporate retrench. They still want to do non-deal roadshows. They still want to go out to conferences. And what
here's that area from yesterday. It's retesting. I didn't think it'd get back to that. Obviously, this is all market manipulation because obviously everything's selling off. But this is what happens against retail traders, especially on small time frames. So we just got to wait it out, wait for this drop.
And we view that as a very strong signal. We've also
just go left here, you can see the area we've got to play with.
That's a very good positive for equities.
This is where a lot of people were pending sells. Look, as you can see, that 3155 zone.
Everyone is waiting for the next shoe to drop. Everyone thinks everything's going to fall apart right here, right now, and we think the first half of next year is going to be difficult. But you've pulled ahead a little bit too much risk and a little too much.
RSI is getting to that overbought zone now. Lovely.
Whether you'd lean the other way. One thing you talk about in some of your research is this long software trade, very defensive, short semis, highly cyclical, and how that's worked well.
So we're going to go another 5, 4, 5, just a quarter, and then that's it. We've been scalping. We've got no positions open at the moment. We're just waiting to take some more sells. I could say that was 22 trades taken, so we smashed our target today. We're 22% on our account. True scalping. It's the way to rock.
See that trade going the other way sometime between now and year-end. So what we're telling clients is, hey, it's working, it's great, but we'll be looking for how do we be looking to take some profits on that trade.
Chris, Brent and WTI down hard today, up by 4% on crude to 83.40 on WTI. Brent crude to break a 90. So we're really rolling both here. And as you know, the energy winners have been the winners of this year. Any idea about what you want to do with that now?
John, we touched on this the last time I was on the show.
So we're waiting on the MI cable and sells on US-30. So we know what we're waiting for. It's a case of waiting for it all to sync together, nice and easy. That's the way to do it. So we'll wait for this to bottom out. As it gets to our yellow line, we're looking then to take buys on cable. So we're looking for this later on. Just post that for everybody. And like I say, if you want to learn how to do this, then you can join our group and go to the website www.mohawkforex.com. So we're looking for buys on cable, and we're going to be looking for sells on US-30 now. And there you go. So we know what we're looking at on here. We'll just wait and see if we're going to get a retest of that golden zone. That's what we want. Price has got a break above here.
John, that's a good question because we don't look at the NASDAQ explicitly, right? We generally look at different sectors, we look at the different stocks, and what we would say is if you can find stocks, and there are plenty of large cap stocks, and there's plenty of growth stocks that are trading at reasonable prices, that's the portfolio that we want longer term. That's where we want to place our bets. As far as the market overall, we do think you're setting up for an oversold bounce, which includes the NASDAQ. If you're building a portfolio, really look for those reasonably priced growth stocks because the economy's slowing down, inflation is coming off the boil, and there was a massive de-rating in the first half of this year, which has uncovered, funny enough, a lot of value in the growth space.
Chris Harvey of Wells Fargo. Chris, appreciate it, sir. As always, working through some of these issues. Right now, about 13 minutes into the session, equities positive 0.4% on the NASDAQ, up about 0.75%. We'll catch up with Mike McKee.
Brilliant. Well, that's it. We're done 15 minutes. We've done an hour since the news event. We've successfully traded. We're looking for sells on US-30, looking for buys on cable. All results will be posted into the group. And like I say, go to the website if you want to learn how to true scalp, get those pips quick, get out of the market. Don't overstay your welcome, get green and get gone. That's as simple as. Yep, thanks again to everybody for joining. And please give us a like, subscribe, tell everybody about this. And if you want to learn the technique, then like I say, hit me up on the website and happy to have you join the group. So we'll be back doing another live stream. Like I say, I'll keep the guys posted in the group what's happening with the trades. We've got API oil, crude oil to trade later on as well, which we can see here is taking a nice drop. So oil down the bottom of the fib, beautiful position. We'll keep an eye on that. So yeah, until my next live stream, like I say, subscribe so you get notifications. Trade safe, everybody. Thanks for joining me today. And true scalping rules forever. And I'll see you on the next live stream. Take care.